Good afternoon. I hope everyone is good. Well, basically, this session is mainly going to be focusing on portfolios because uh, what we need to do as besides trading, what we need to do is we need to grow our portfolios. We need to have a solid investment portfolio. That is part of what we do in terms of our institute. That's our main goal. Our main goal is to grow traders that have solid portfolios. When you talk about portfolio, we're talking about something. Remember, that's a disclaimer. This training is for educational purposes and cannot be taken as financial advice. So remember, we are just sharing information just to give people education. It's not a financial advice. You use the information for your benefits. It's not a financial advice. Okay. So what we want to focus on is we want to make sure all our traders they are so liquid in terms of their finances. Just think about this. Imagine coming to a gold mine with one machine. So every time you mine gold, you put some of the gold into a reserve. So a week goes by, you repeat the process until you have enough reserve money to buy a second machine. So of which you use to come to the same mine to extract gold at the same time as the first one. So now when you have two machines operating at the same time, that allows you to get more gold and you can build your reserve much quicker. Okay. So that means you're going to be getting more gold, and also that means you're going to be building up your reserves very quick. And then what you do, you use the reserved um, to buy a third machine, and then a fourth machine, then a fifth machine. Remember, when you have five machines operating at full capacity, you are able now to get more gold to live for the rest of your life with profits, and you are able to build bigger reserves to enter even other territories. You know, that's what we want to do in terms with our institute. That's what we want to do in our company. We want to make sure that number one, you build one trading account. You use that one trading account to build other trading account, to fund other trading account. And then once you've received that, once you've done that, uh, you will have better reserves. You will grow your profits much faster, and you use your profits to fund that second account. So this is the process. Okay. Step one, you go to different brokers. You create empty trading account. So let's say you go to one broker, maybe XM. You have an account with XM where you trade currencies. Then you have other account, other brokers where you trade indices and gold. Then you have other account where you're going to be trading shares and stocks and indices. And then once you've created those accounts, then you allocate funds to one trading account. That's going to be your startup. Okay, you allocate funds to one trading account. And then what you do is you follow the trades or the ideas or the signal that you share on our Telegram channel and also on our WhatsApp group. And then you use your profits to fund trading account number two. Okay. And then you withdraw your profits into trade account number two. You repeat the process to fund an account number three, then account number four, then account number five. But you can have strictly three accounts. So you use profits from one trading account, you fund a second account, then you fund a third account. Now you have three accounts that you are trading, that you are managing, and those accounts they are building up a profits, they are building up your savings. You will use your savings to make investments. Okay, so that's our goal. So why you use this method? You use because it will help you create multiple streams of income from one stream. So what you have Forex account, but now you have different trading account that you are trading. And if one trading account is running at the loss, perhaps the two one are running at profits. So this will help you spread your eggs across multiple baskets. So you are simple diversification. That is the king. Then it will help you focus on the overall performance instead of focusing on one trading account. So your main focus will be on the overall performance of your 3 or 4 trading account instead of focusing on one account. So what you can do is you can have one trading account where you trade currencies, have one trading account where you trade VIX, like your volatility index. Then you have one trading account where you trading uh, indices like your Nasdaq, like your Dax, like your SP 500, like your Dow Jones, where you're trading all those indices and also you're trading gold. So you can have 3 accounts. With these accounts, your focus is that because you are likely to end off every month profitable, even if it's 1 or 2 trading account that are running at the loss. This will help you will have other accounts that are in profits. If other accounts are in a drawdown, but you know the other 2 or 3 they're in profits. Okay. So what do you do? Number one, you go to the broker and you create 3 or 5 trading accounts with different brokers. And then you allocate funds to one trading account. And then you use our signal and analysis and our trade ideas on our WhatsApp group to fund an account number 2. Then you withdraw your profits from account number 2 to fund account number 3. And then you keep on growing those accounts. Okay. So that's the thing. That is the key. That's how you're gonna be having a good portfolio. Okay. Remember, these profits, once you have about, let's say you have 3 accounts that you are trading now. This is what you're gonna be doing. It's the same procedure as you are doing when you are mining gold with a machine. So you have about 3, let's say you have 3 accounts that are giving you profits. Whenever you withdraw profits, you save a profit to put in the emergency savings account, and then you put some of the profits back to an investment. That investment must give you like a passive income, or you must buy assets. Okay. So the more accounts you have, the faster you're building your reserves and the faster you're building your savings. Okay. I hope I'm making sense. So with this is a formula. So you make money from active income, then buy or build income producing assets. Remember, there must be income producing assets. Yes, you can have a savings account. Yes, you can have a tax-free savings account, emergency fund account, but you must also, your main focus must be on having income producing assets. We're going to talk later in terms of assets. So this is what you can do. So the first thing, other thing you can do, obviously, is you can open an account with a brokerage firm like your Easy Equities. Obviously, also other banks, they do allow you to do this. Like Easy Equities is one of the you can buy shares as little as 10 rand. Okay, so by buying those shares in those companies, you will be able to invest. Maybe you can focus with similar companies like your Facebook, like your Amazon, like your Showprice, like your Tesla, like your Sasol. So you are buying when you make your profits from your trading account. Some of the profits you take and you allocate some. Let's say you allocate 10% of your profits to buying shares via Easy Equities, or you buy shares via maybe FNB or Standard Bank, or even via Capitec app. So that's 10% of your money goes to buying shares. And then you allocate another 10% to buying silver and gold. Remember, that is very good due to inflation. So buying gold is good for your money. And then you must save so you can invest and buy land. Land. Remember that landlord, they make money while they are asleep because land appreciates in value. And then you buy property. Your focus on property is having a rental income on those properties. The other thing that you can do, maybe some of your 10% profits, you can look into crypto, like your Bitcoin, like Ethereum. There are many Bitcoin that you can do. You can buy and hold them, or you can also mine them for passive income. Remember, your focus is on buying things that appreciates in value. Other thing you can look into, guys, is looking into the livestock, like where when they grow, when they have more, you know, when they grow, when they multiply, that's where you're gonna get a good, nice return on your investment. Another thing, when you have money, you should always invest in your financial education, your own personal development. Maybe get a degree, get a diploma, maybe pay someone who's going to teach you certain knowledge in terms of trading or even finance or leadership or even your own education. Maybe, you know, you have to always be learning and growing, because if you're not growing, you are dying. You should always have knowledge, gain knowledge, learn about new things, new technology, new things in our trading, or new things in terms of the trend that are going on in the world. You know, learn about stuff that are going. Also, you should always invest in your own. If you have kids, always invest for your children education. Okay. And then obviously some of your funds should go into emergency funds, which is in case of emergency. And then you should always have that say tax-free savings account. You can go to even Old Mutual, you can go to FNB, you can go to Bank, you can go even to Time Bank. Most banks, they offer this. I think the maximum is about 35,000 Rand a year. And it's also about 500,000 in your lifetime. So this is just a tax-free savings account. There's no tax. Even some of the banks, they can even give you like 5% or 10% per annum on these savings account. And also another investment you can do obviously is to launch your own business, or you can invest in one business. So remember, so your main focus is to have a portfolio that is diverse. At the same time, you want to make sure that in case you are not able to trade, but you have some investment that are giving you an income. In case the market is slowing down, in case you cannot even be able to analyze, in case you can't make money from trading, but you've got a portfolio that is solid from your share. Maybe if you can look into companies like in terms of shares that are giving dividends. Dividends is some money that is company they pay maybe after a period of 3 months, which means what you can invest in company that pay dividends in January, in February. It's just know every month you've got a company that is paying you some dividends. So what you can do, focus on making sure you invest in companies that are paying dividends. So every month you'll be getting some dividends. So that's how you build a portfolio. So focus on companies you're familiar with. Also focus on companies that are giving you some dividends, and invest in gold and silver. Okay. Yeah, and grow your property and your property portfolio. Okay. So your focus basically is on passive income. So passive income is about making money while you are asleep. Remember, we are traders. So whenever we make profits, we should always look into investing. We should always look into making sure that our things are sorted. Obviously, buying appreciating assets. Yes, you should have money for you to enjoy and have fun and have some holidays and have some like spoil yourself, but you should always make sure that that you are making sure that it's your investments, it's your profits that are funding your lifestyle. Avoid getting into debt because you want to fund the lifestyle, but it's better if you use your profits, if you use profits from your assets to fund your lifestyle, the life you are living, to pay for your bills. If you've got that money from your profits, you've got that money from your income, from your income producing assets. You know, also look into retirement funds, look into ETFs. So those are some of the things that will give you some income. Obviously, rental property, because that is giving you some sort of income. Also look into royalties. If you can sing, if you can write a book, those are some of the multiple streams of income that you can look into. If you can program, do maybe create a software or strategy or something, those another thing that you can look into. Obviously, subscription services, those are the one that gives you a nice passive income, you know. So there are many things out there that are giving you passive income, but make sure whatever you are focusing energy on must be legit, and it must be something that you can even leave to your children. So that's what you should be focusing on. So remember, the important thing obviously is you should always have objectives. To say Like for instance, you should have a target, you should have some goals, you should know how much you are willing to start with from your trading account, and also in terms of to your investment, allocate a percentage, should have knowledge in terms of which choice of assets you want to look into. And obviously you should understand if you're looking into like choice of asset from, are they financial assets like your paper assets in terms of, are they shares, are they cryptocurrencies, are you looking into buying bonds, are you looking to buying into retirement funds, or are you looking to buying solid assets, maybe like stuff that you can rent out, or maybe property which is real that you can touch, or buy some material, or buy some physical gold or silver. You should know between the two. But the important thing is the reason why you need to do this, the reason why you have to have a solid portfolio is because if you are financially free, if you have a solid portfolio, if you are getting passive income whereby you're not under pressure to make an income every month, but your investment are helping you pay your bills every month. At the same time, you can just focus on building your trading account, growing your trading account, and always allocating funds accordingly to your choice of assets, and also to your goal, and also what you want to achieve as a trader or as a portfolio manager. Learn about in terms of learn about different industry. Okay, so obviously that, like we said before, as fund the live trading account, then get some profits. You fund other two trading account, have at least three trading account on different brokers, one for needs that you need to cover every day, maybe one trading account you withdraw every week or every 2 weeks, and then the other account you should withdraw maybe every month or after a period of 3 months. And then obviously one account maybe you withdraw, maybe it's for a long-term thing like buying a car, like buying a house, maybe investing for your children or for your family or whatever thing you need to do. But whenever you withdraw profits, you should always first invest. First invest before you spend. Before you spend. First invest before you spend. First invest before you spend. That's the key thing. Because first invest into a portfolio, first invest into buying shares, first invest or save to invest to buy properties. That's the first thing you should do whenever you get some profits. That will help you build a solid portfolio. It's not about the amount, it's about the principle. If you're investing 10% of your profits or 20% of your profits, you will see after a period of 6 months or a period of 8 months how much you have in your portfolio. Okay, so obviously you should always conduct some analysis, technical analysis and fundamental analysis before you invest in any investment. Okay, look at the trend, look at the prices, and look at the true value and the return on your investment that you're looking into. Obviously you should understand how to create a portfolio in different asset class, from your currency trading to your indices, to your gold, to your silver, to your property. And also obviously look into to divest in terms of your investment, and always look at your evaluate your performance, and always repeat the process. Okay, I'm hoping that makes sense. So if you're investing, or it's obviously it's a real investment where you purchase land, machinery, or livestock, or it's a financial investment, we're looking into shares or stock or crypto or gold. So that's the thing. So what we want to do is we want to have traders that have solid portfolio. Okay, so you make money from your active income, then you buy or build income producing assets. So like I said before, step number one, create 3 to 5 trading account with different brokers, allocate funds to fund one trading account, then follow our signals and our analyses, and use your profits to fund account number two. Then withdraw profits into account number two and repeat the process. You fund account number three or number four, or number five. But it's best if obviously you have maybe 3 accounts. Okay. And then obviously this will help you have different account. Then you focus on overall performance and on one trading account. So whenever you make funds or profits from your trading account, you build your portfolio from investing into shares to investing into gold to to investing into land and property, to saving into an emergency fund or tax-free saving account, or launching a business. So I'm hoping, guys, that was helpful. Have a good night and thank you very much. I'm signing out. My name is Wonga, President Wonga. Thank you. Thank you. Thank you. Thank you. Thank you. If you have any question, obviously, I available on WhatsApp. You can talk there. Yes. Otherwise, that's the end of our session tonight. All right. Okay. Cool. So it was really about building a portfolio, nothing much.